Why is Buffett selling Apple stock now? And should you? Welcome to this Valuation Masterclass case study. My name's Andrew Stotts, and here's what you're going to learn in this video. First, you're going to discover why even a giant like Apple still has room to grow. You're going to uncover the reasons behind Buffett's recent sale of Apple shares and find out if you should consider doing the same. And we're going to identify the risks Apple faces as it may have reached peaks in price, margins, and growth. And finally, we're going to evaluate Apple's potential using my cheat sheet for assessing any stock's attractiveness. And you can get that cheat sheet and this presentation for free by clicking on the link in the description. So let's go into the company's background. As of October of 2024, Apple is the largest company in the world by market cap. Its market capitalization is about $3.4 trillion. Incredible. In the middle of this presentation, I'm going to talk to you about what a corporate strategist wrote about Apple back in 2005, and it's going to surprise you. This tech giant redefined innovation. Founded in 1976 by Steve Jobs, Steve Wozniak, and Ronald Wayne, Apple revolutionized personal tech with its focus on design and premium user experience. Apple offers pioneering products like iPhone, iPad, and Mac, along with services like iCloud and Apple Music. And these products and services are available worldwide through about 500 Apple-owned retail stores in 25 countries. I bet you've been to some of these stores. I've been to the store here in Bangkok, and I've also been to that amazing store in New York City. Apple has two distinct segments. First is the product segment, which generates about $298 billion worth of revenue, which is about 78% of the total revenue of the company. And the second part of Apple that nobody would have thought of many years ago, but is now a huge part of Apple, is services, which accounts for $85 billion, or about 22% of total revenue. Now, over half of Apple's revenue comes from the iPhone sales, which is kind of amazing when you think that's not even where Apple started. It started in computers. That's the long and winding road of business. Wearables like watches and AirPods account for about 11% of the revenue. And then Mac accounts for only 8% and iPad about 7%. Let's review some recent financial disclosures that the company has given us. Here we can see that sales dropped in 2023 mainly due to a 28% drop in Mac sales. So this table is showing us that Mac sales accounted for about 29 billion of the total 383 billion in revenue, which is tiny when you think about it. In fact, you could argue Apple is hardly in the computer space anymore. Now, Apple's overall gross profit declined due to a 5% drop in gross profit in its product segment. So we can see that the big drop had come in Mac sales, which was down 28%. And we can see that drove the gross profit to fall. So gross profit in the product segment fell by about 5%. Now in the services segment, it still grew by about 8%, but it wasn't enough to offset, and therefore Apple had a 1% decline in revenue in 2023 compared to 2022. Also, they're making massive profits in services with a gross profit margin of 71%. Apple services contribute just 22% of revenue, but drive a remarkable 36% of gross profit. So let's dig into one of the questions that I said I would answer in this, and that's discover why even a giant like Apple still has room to grow. And I think the best way to look at that is to look at a global map. And we can see that 42% of Apple's revenue is coming from North America, 25% from Europe, 19% from China, 6% from Japan, and it's this 8% in the rest of Asia where there is massive potential. What we can see is that emerging markets like India and Southeast Asia are, huge opportunities, and they're basically promoting entry-level models like the iPhone SE to continue to penetrate. But you could see that there's still plenty of opportunity to sell. Now, it would be fun to go through Apple's timeline in a little bit quick way, but in 1983, which was the year I graduated from high school, the computer called Lisa debuted, and it was the first PC with graphics interface, and it was named after Steve Jobs' daughter. By that time, when I graduated from high school, I don't remember ever seeing a computer in high school myself, but I was pretty stoned most of the time. Now, in 1988, when I first bought my first PC. I never bought a Mac at that time, and it was the first iMac. With its colorful design and user friendliness, the iMac was the first computer that seemed cool. In 1997, which for me I was in Bangkok, and that was the year of the Asian crisis, Steve Jobs returned, and after he was fired by the company's board in 1985, he came back and he spurred a turnaround, and Apple at the time was facing bankruptcy. In 2001, iPod arrived. 1,000 songs in your pocket. Fortune called it Apple's 21st century Walkman. In 2007, the iPhone arrived, and I call it the BlackBerry killer because everybody was using BlackBerries at the time, and Jobs described it as an iPod and a phone and an internet communications device in one. In 2008, the MacBook Air came out, and even I bought one because it was so impressive. Steve Jobs pulled it out of a manila folder, and it was a revolutionary computer that became the world's thinnest. Fortune magazine called Steve Jobs CEO of the decade in 2009. Unfortunately, the world lost Steve Jobs at the year 2011. Now, Apple wasn't done yet, though. That's 2011. That's a long time ago, and look at how Tim Cook has been running this company since 2011. After Jobs' death, Cook took over and used his catchphrase, "one more thing," to introduce the Apple Watch. And in 2016, time to go wireless, Apple unveiled the AirPods after the announcement of removing the headphone jack from its iPhones, and now wearables account for $40 billion, or 10% of its revenue. It's an incredible move in 2016. In 2023, Apple introduced Vision Pro, their first spatial computer. And Vision Pro is a mixed reality headset that combines virtual and augmented reality, allowing users to interact with digital content in a 3D space. So let's recap this background. 50% of revenue comes from iPhones. Wearables account for about $40 billion, or 10% of its revenue, and there's still room for growth in spite of being the largest company by market cap. So what about the company's competitive strategy? Well, Apple has revenue of about $383 billion and 164,000 employees, and its main segments are iPhone, services, and Mac computers. So what is the company's competitive advantage? Well, competitive advantage comes from product differentiation, user experience, and strong brand loyalty. So how did it achieve this? By leveraging innovation, premium product design, a seamless ecosystem, which I'm going to talk about in just a minute, an efficient supply chain, impactful marketing, and expanding into high-margin services. So let's look at these high-margin services. They are so impressive as moneymakers for Apple. Apple's services make up 36% of its total profits, with a high 70% gross profit margin, much higher than the 37% on its core. The services segment has grown faster than any other, with a 5% CAGR, or over 16%. And this growth has helped Apple become less reliant on hardware sales, reinforcing its ecosystem and increased customer retention while driving higher profitability. Here we can see that ecosystem, the connection between all the different devices, whether it's an iPad, an iPhone, an iMac, or whatever, it all comes together. Apple's ecosystem is tightly integrated, making it easy for users to connect and switch between devices. And this has created a stickiness where customers are less likely to switch to other brands. And I just want to highlight, the other day I went to buy my new Apple iPhone iPhone 16 Pro, and it's so easy. I just went to my provider for my cellular service, and I brought it, and I said, I want to trade in this one and get the latest one. It was just seamless. It's incredible. No other system really has got that seamless ecosystem. But I would say in the beginning of this, I told you that I was going to talk about this ecosystem. I want to talk about this book I've been reading, and I think it's a very good book called Competition Demystified, a radically simplified approach to business strategy by Bruce Greenwald and Judd Kahn. And what was just so funny was at the end of this section on discussing Apple, so this is long before Apple really became, to this level of so great. He said, though its sales in the year ending 2000 were down almost 30% from the high of 1995, Jobs had managed to restore operating margins to the same 5% level they had been. Apple survived. It had hardly prospered. Its future does not look bright. Well, unfortunately, that was a terrible prediction because it became the largest company in the world. What did they miss? Well, I think the value of the ecosystem and being able to offer services within that ecosystem I think was underestimated. And it's hard to see those types of things many years prior. Customers eagerly wait to be the first to experience the latest innovations from Apple. Me too. Apple has a cult-like following driven by powerful branding and marketing, and Apple's advertising focuses on lifestyles and emotions, creating a strong connection with the users. Let's look at some latest news. Apple, again, ranked as the most valuable brand according to Brand Finance Global 500 ranking. Apple's remarkable brand loyalty, built over decades, plays a pivotal role in this achievement. Looking at the competitive strategy of Apple, one of the things you can say is they stuck with what they were doing and they never veered far off. Now, right after the release of Vision Pro in 2024, a Brazilian doctor used it during surgery. This is the first surgery in Brazil replacing surgery monitors with Vision Pro, and the doctor can view the joint camera's visuals on a large virtual screen in the headset as opposed to seeing it on a screen. Let's talk about Apple's buyback program, which is still on. In fact, the company announced a $110 billion share buyback program in 2024, which is considered the largest in US history. In addition, Apple is bringing ChatGPT to iPhones in AI overhaul. Apple has announced a significant integration of OpenAI's ChatGPT into the device, branded as Apple Intelligence. And this new feature will enhance Siri and other applications across iOS 18. So, remember I said that we would look and uncover the reasons behind Buffett's recent sale of Apple shares and find out if you should consider doing the same. Remember, you can get the cheat sheet that I'm going to show you in just a bit and this presentation by clicking the link in the description below. So, Warren Buffett is selling Apple. Should you? Well, so far in 2024, Berkshire sold about 489 million shares of Apple. At an average year-to-date 2024 price of about $200, it would add nearly $100 billion in cash to Berkshire's coffers. So why is Buffett selling? Well, concern over a potential rise in corporate tax rates from current 21% level. Now, this was prior to Trump getting elected, and basically Buffett had said, with the present fiscal policy, I think higher taxes are quite likely, and therefore he wanted to capture his gains and pay the 21% tax before it went up. Reducing concentration risk, as Apple accounted for nearly half of his portfolio, so it's realistic to trim down that position. And maybe he just considers Apple overvalued. We're going to talk about that in just a second. And the sale has yielded him about $100 million of cash. And at the end of first quarter of 2024, Berkshire held about $189 billion in cash, which has increased to $325 billion by third quarter 2024. So is Warren Buffett getting prepared for a market crash where he can come back and buy attractive stocks at a lower price? Very possible. But wait. Here's a company, Poland Capital, the asset manager with about 58 billion assets under management. They're buying Apple. And what are they saying? They view Apple's AI features and shifts to higher price models as justifying the 30 times earnings valuation. The firm anticipates double-digit returns as consumers prioritize upgrading to Apple's new devices. So which one would you choose? Well, I'm kind of leaning more towards Buffett, but let's try to get some more data and understand this. But to recap this section, the services segment is a money maker. Apple's ecosystems foster customer loyalty, strengthening its competitive edge. And finally, Buffett's Apple sales likely are aimed to reduce tax and concentration risk, address Apple's possibly high valuation, and increase cash reserves by $100 billion to third quarter 2024's $325 billion US dollars. So does this strategy of Apple lead to a competitive advantage? In other words, is the company financially world-class? Well, I use my world-class benchmarking scorecard to measure if a company has a competitive advantage. I developed this scorecard 10 years ago, and here's how we construct it. My team gathers the yearly and quarterly financial data of 26,000 companies worldwide. We then calculate each company's profitable growth score, which is a composite that we create of both profitability and growth. After that, we rank the company relative to sector peers of similar size. Of course, Apple is huge. And a decile ranking of a 1 or a 2 is financially world-class, while 10 is the worst. We assess the company's performance over the prior 4 years and the past 12 months, which we call PTM. So is Apple financially world-class? Here we can see the top of this triangle that we use in world-class benchmarking shows Apple is world-class, ranked number 1 for every period of time here. So what does the valuation look like? Well, here we can see Apple's recent positive share price momentum could be peaking. The 50-day moving average is above the 200-day moving average, indicating positive momentum that's going on right now. But the share price has recently fallen through the 50-day moving average, which could be a bearish turning point, and the volume RSI has fallen below 50, which signals selling pressures. So from this share price chart, I would say it looks a little risky at this point. Now let's answer the other point that I mentioned at the beginning of the video. I want to identify the risks Apple faces as it may have reached peaks in price, margins, and growth. Well, we just saw the peak in price there, but I want to go into growth and margins. I use my FEMR methodology to determine the attractiveness of the company, and I want to look first at the F, which is fundamentals, which is mainly net profit margin, return on assets, those types of measures. But let's look at net profit margin of Apple for a moment. Here we can see that net margin is 3 to 4 times the global company average. It's incredible. Apple is earning 25% net margin in 2023 versus only 7% for all companies in the world in my database. So you could argue that Apple is at the peak of net margin, and that could be part of the reason why Buffett is reducing his position. Now, what about, we can look at the V, that's valuation, like PE and price to book, and then we can look at EPS growth and price change and the like. Let's look at that for a moment. Here we can see the revenue CAGR and of 9% from 2015 to 2023. That's 2 percentage points above the global average. This chart I made to try to highlight how strong Apple is. We can see in 2015, revenue was up 28%. In 2021, it was up 33%. And Apple outperformed in most of those years. But it gets even better when we look at recurring EPS CAGR, which was 16% from 2015 to 2023. That's 9 percentage points above the global average, an incredible growth for a massive company. Of course, that growth is slowing down, as we can see in 2022 and 2023. But the question you have to ask is there still potential to grow EPS? I would argue that potential is available through revenue growth, but maybe less so through margin growth, because the margin has already expanded to a very high 25%. So if you can see strong revenue growth coming in the next 5 years, then I think you can argue that we could see strong growth in EPS. But that growth in EPS probably is not going to come from margin expansion. So the R in FEMR is about risks, earnings risks like net debt to equity, and price risks like beta as an example. So let's take a look at the abbreviated FEMR scorecard to determine the attractiveness of Apple. This is the final part of the video that I said I'm going to evaluate Apple's potential using my cheat sheet for assessing any stock's attractiveness. Here we can see Apple ranks 6th based on this FEMR assessment, where I'm ranking Apple relative to its global peers within the infotech and tech hardware and equipment space, and Apple definitely stands out. Now, this FEMR assessment is a simple ranking of the various fundamentals, valuation, and momentum and risk measures that I use, but it gives you some guide. So based upon this, Apple still could be attractive. Now, the problem about this is that I do use past data rather than future, just because it's a little bit simpler, but it's good to understand where things are. You can click the link in the description to download this PDF and get this abbreviated FEMR scorecard for the world's top 500 companies. In fact, if you drop your email by clicking on the link, I'll update that scorecard in your email box of the top 500 companies in the world based upon the FEMR ranking. So, what do you think? Why is Buffett selling Apple? And should you sell now? Let me know your thoughts in the comments.